Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with us as always on Wednesday is David from DeFi University. How's it going, brother?
I'm doing well, Mike. How are you today, man?
Doing awesome. Just getting ready to go outside and do a couple of burn piles with my lady. We got a bunch of stuff slashed off the property and need to get rid of it. Just doing that fire mitigation, all that kind of stuff.
Cool, man. Sounds good to me. Sounds like a great day in the sun.
Absolutely, absolutely. It's getting nice up here. All the leaves are changing, and so it's getting kind of nice. But how are you doing?
Hey, man, I'm doing really well. Taking a look at markets here, I've got a little bit of a market rundown that I can,
Yeah,
hop to if you'd
pop it
like
up.
to. All
Actually,
righty.
real quick, let people know where to find you. So, if as you can see here, this is our YouTube channel, DeFi Crypto and Airdrops, and if you want to join the conversation, join the chat with Jay Luis and everybody else in the chat, then go ahead and jump on over here and you can ask questions and we'll make sure we get to those. But also, if you want to find David, you can find him here at DeFi University. So if you want to follow him on YouTube, he's started populating that with a lot of very, very informative videos. So if you want to check that out, you got the blockchain report. If you're interested in airdrops, my co-host Jeff runs that, and then Jake. Oh, there he is. He's here now. All right, all right.
What's up?
Yay!
I was gonna say if he shows up, then that's where you find Jake. Is
Yeah, there we are.
All right. Well, let's do this. So I'll adjust that real quick, and let's get Jake in there.
Hey, Jake, thanks so much for hopping into the DeFi University School community the other day, man. That was really great to see that lend borrow
Of
product that you've
course.
been working on. I can't wait to start using that thing, man.
Yeah, it's
Yeah,
great to see a lot of the people from DeFi University as well as from DeFi Crypto Airdrops. We had a exclusive session this morning where we just kind of dove into lending and borrowing, like from high level, like getting started to like looping to using liquidity pools, and then tomorrow we go over the liquidity pool strategy as well in a private session. So it's cool to see all the audience mixed up.
Dude, I
I'm
love it. I love it,
liking
man.
how the communities are starting to kind of intermingle, to where they're finding different bits of value, between Jake, what you're teaching, and with metrics finance, David with DeFi University, us with just deep dives into different projects, and it's like a really good symbiotic relationship, where we're all offering a little something that's just enough different to where it's giving a fuller spectrum of information. So
Yeah.
yeah, I'm really enjoying it. But yeah, if you want to find Jake, this is his channel, and he has a lot of really great information there, and has done a couple of deep dives. I mean, we have some on our channel. Me and him did a deep dive with some new functionality on metrics finance just yesterday. If we want to check that out. But he has some really good deep dives on metrics finance on his channel as well. And then, of course, Drew over Blockchain Basement and Discover Crypto. So, with that, if you want to share your screen, David, I'll turn it over to you.
All righty, man. Give me 1 second. I'll go ahead and get my screen share rocking and rolling. Let's do this. I'm going to go ahead and share the entire screen, and then I'm going to hop into TradingView. All righty. So just want to make sure that Mike, Jake, you guys can see my TradingView screen brought up
There we
here.
go.
There we go.
Alrighty. So I actually want to start things off by discussing, some of the market commentary from yesterday, because I think that remains pertinent today. So yesterday, at the beginning of the session, Oracle sold off sharply, and this is important. So, are we in an AI bubble? Well, maybe. Maybe that's likely, actually. So, waiting to see if the revenues from all of this AI capex can catch up to the expenditures. And, the report yesterday about Oracle was that their margins are actually very thin, and some of the AI services that they sell are loss making. So Oracle sold off at the beginning of the session, spent the rest of the day rallying, and that dragged the S&P down a little bit yesterday. Now, if we bring things over to Bitcoin and Ethereum, this is a 1 hour chart. I'm going to zoom out to a daily. Um, on the way up for BTC, notice all of these long wicks on the way up on the daily candles here. We've got one wick here, another long wick here, long wick here. So these are not quite tweezers, but the fact that BTC was rejected at the all-time highs, if we zoom in here to an hourly, and just we got to be able to call a spade a spade. It's not about being blindly bullish. It's about reading what the market is telling us. And this was a false breakout yesterday. Now, that does not mean that suddenly Bitcoin is going to move to the downside. I do not believe that to be likely. But this was a false breakout.
I just bought my first Bitcoin yesterday, so on the dip. So
Great, man. Yeah. So, a little bit of a baby dip yesterday in the morning, early in the morning yesterday. And I want to just touch on this real quick. And Jake, Mike, I'm curious to, learn what you guys think about this. I hopped on into Claude earlier today, and I asked it, how much capital does it take to move the price of Bitcoin by 1%? Now, here's the reason why I asked this question. I see on X all the time, and just bear in mind, you got to take what you read on X with a grain of salt. But I see on X, reputable accounts posting about Jane Street and Binance dumping, $50 million of BTC and ETH, which for those institutions, those firms, is a relatively small amount. But I wanted to find out, how much capital does it take to move the price of Bitcoin by 1%? Now, this is important. If I was a market maker, right, and I wanted to, sell assets without moving the price, well, I probably wouldn't dump $50 million of assets all at once over the course of a couple of hours. So it makes me think that if I'm a market maker and I have the ability to exit positions without moving the price, well, then why would I dump a position if I know that it's likely to move the price by 1% or greater? And so what I found after performing this research was that, it could take between 50 and $100 million to move the price of Bitcoin by 1%. Now, Bitcoin at a $2 trillion market cap, you might need a little bit more than that to move the price by 1%, but it depends on the time of day, the time of week. Remember when we saw those big liquidation events just the other week? That was on a Sunday evening when liquidity is typically thinner than it is during the week. So it just makes me think that maybe these firms can move the price if they choose to. I tend to not, try to dwell on whether market makers are trying to manipulate things, but it's a fact that they could move the price if they wanted to. And the fact that they could close or exit a position without moving the price, and yet when we see Jane Street and Binance dumping 50 or 60 or $70 million of digital assets over the course of just a couple of hours, and it does move the price, the fact that they could exit those positions without moving the price tells me that maybe their intent is to move the price. What do you guys think about that? Do you think that these firms intentionally move the price around, or no?
I think so for sure, David. I think it's meant to create fear in the market. And I like to think like a capitalist, right? If I wanted to basically prioritize myself and my own pockets, what would I do? I would create fear in the market. I would sell off some assets knowing damn well I'm at a really good profit. And I would, start to instill fear through the news, through the media that, big companies own already, to the point where retail investors start to sell, right? And smaller institutions start to sell. Family offices start to sell, right?
and that just compounds it all.
Yeah, to the point where I can buy in at a better price, and then, oh no, crypto's the future. Crypto's going to go back up. So
Right.
Yep.
$500,000, you know, and
Kramer comes on and says to sell, and so
Uh,
everybody.
that's the best buy signal there is.
I know, right?
yeah.
Yeah.
But yeah, that's exactly what I would do, David. So yes, I do think there's a very, very high level of manipulation happening in the markets, basically. So
Yeah. So thanks, you guys. I appreciate that validation, And if we take a look over here at ETH real quick, also, this is a false breakout. And, right here, this is the anchor point at the old all-time high. I connected that to the next lower high, extended to the right. And notice how ETH acted as it approached this level of resistance. If we zoom in a little bit, rejected by resistance, little baby false breakout, rejected again, and then the push higher, but then rejected yesterday. So this is a false breakout. And notice where ETH found resistance today, at trendline resistance. So I expect this level of resistance to break to the upside over the coming days and weeks. I am an ETH bull. Maybe I'm talking my book a little bit here, but I think that
You're interested in ETH?
I don't know, man. I mean,
wow.
maybe, but yeah. So a couple of false breakouts, but has structure been broken? No, I don't think so. And I think that it's likely that prices continue to run higher because the thesis, the reason why I'm bullish on ETH, that hasn't changed at all. The stablecoin revolution and the payments revolution, I think it comes to Ethereum first. And what we saw just yesterday was Intercontinental Exchange, ICE, the parent company of the New York Stock Exchange, NYSE. ICE invested, they took a $2 billion stake in betting protocol Polymarket. And so that is a huge vote of confidence. So the largest institutions on Wall Street are not just, building these ETF products and these digital asset treasury companies, but they're also taking significant stakes in Web3 protocols. I think it's just a matter of time until we see dApps that are actually coded by like physicists on Wall Street, man. So I think that's just a matter of time until we start to see that. But one thing that's interesting that I noticed today, and then I'll go ahead and pause here. I'm always watching yields. I watch the yield curve closely. And let's just focus on the United States. So this is a chart, this is a daily chart of the yield on 30-year treasury bonds. Now today, the yield is basically flat, off by a couple of ticks, not much. And then if you take a look at the 10-year, and there's a reason why this is important, you take a look at the 10-year, and today the yield on the 10-year basically flat. And yet the US dollar is up. So with the dollar up as yields are flat to down, what that tells me is that if the US dollar has more upside left in the tank, it would probably find resistance if it gets up to roughly 100. I don't think that it could even get up that high. My thought process here is that with yields flat and the dollar up, that the dollar eventually reverses. And I think that this could be, if the dollar breaks down here, breaks this long-term level of support, then I think the next level of support wouldn't come in until down here at roughly 90. That's another 9 or 10 percentage points to the downside. And the dollar is off by nearly 15% so far this year. So it could be that there's more downside ahead for the US dollar. So that, I think, would be supportive of not just digital assets, but risk assets broadly speaking. So if there is a breakdown in the dollar, I would expect Bitcoin, Ethereum, and other digital assets, as well as listed equities, the S&P, and gold to continue to rip higher. Now, if we take a look at gold real quick, this is what a parabola looks like. And gold has been just ripping higher. And so there are actually a handful of tokenized gold products that will allow you to gain exposure to gold, but from within your DeFi wallet. So you could take a look at something like XAUT, that is Tether Gold. You could take a look at something like PAXG, that is Paxos Gold. Now, I wouldn't touch Paxos Gold just because it's a PayPal product, I think, or they're like aligned with PayPal in some way, and I just do not trust PayPal.
I hate
So
PayPal.
I
I've
really
had some
don't
bad
like PayPal.
experiences with them.
So I built my first little company when I was 14, and my experience with PayPal then was abysmal. It was horrible. So yeah, I've got a lot of experience with PayPal. Don't really like them very much. And PaxG, I think, is aligned with PayPal in some way. I would take a look at XAUT over PaxG. Now, there's another entrant to this field of tokenized gold products, and the ticker is GOLD, and it's on Solana. I saw a big shout out to Stephen TCG. I saw him talking about GOLD on Solana just the other day, and it's an interesting product because you can actually provide liquidity in it. Now, there isn't a whole lot of volume in those pools on Meteora on Solana, but it's unique in the fact that you can provide liquidity in gold paired with Solana or gold paired with a stable. That's pretty cool in DeFi. I think we're going to see more of that. Now, for XAUT and for PaxG, you can supply both of these assets as collateral on Morpho or on Euler or on XAUT on Aave, on mainnet, and you can borrow against them, which means that you can lever up your exposure to gold from your DeFi wallet, which I think is super cool. And with yields flat, and I think that there's going to be a continued exodus from bonds into gold, and eventually I think we're going to see those flows into Bitcoin from gold. And the way that I'm tracking that, you guys, is by taking a look at Bitcoin in gold terms. So this is BTC in gold terms. And what I see here, this is, I think, a head and shoulders pattern. But what I'm waiting for is for this pattern to be invalidated. And the way that that would happen is if this level of support that BTC in gold terms is trading near right now, that this level of support holds, Bitcoin bounces in gold terms and gets above this level here, the right shoulder of this head and shoulders pattern. If Bitcoin in gold terms is able to get above 36, then that would invalidate the pattern and Bitcoin would have a little bit higher to run. So those are a couple of the items that I'm watching. And over the next couple of days and couple of weeks, I'm going to seriously consider allocating more heavily to some of these assets that I'm circling with my mouse here. So ETHFi, Jake, Aether, I've got here on my watch list.
Yep.
They've actually got a DAT. I've been doing some research on Aether. Not only, Jake, you were right, man, they generate a ton of revenue, and there's an Aether DAT, which is actually, it seems as though the MNAV there hasn't really compressed in the same way that many of the others have. I'm quite interested in Mantle.
Well,
And
those that aren't familiar, what is an MNAV?
so that is the premium that you pay when you buy shares of a digital asset treasury company over and above if you had just bought the underlying asset itself.
Okay.
So usually we're looking for an MNAV well above 1.0. It would be preferably above 2.0 or something potentially even higher than that. So looking for digital asset treasury companies that have an MNAV well above 1. So that's, I'm kind of interested in Aether. I haven't done a deep dive on it yet. I'm also quite interested in Mantle. And, Mantle is one of those, alts on EVM chains that I actually shied away from last year because the terminology that they use for their products, it's got all these weird drug references, and that turned me off. But this chart turned me back on, man. So, so what I've done is I put together a piece of research on Mantle. and its associated tokens, protocol tokens. And so this piece of research I plan to present to everyone in the DeFi University School community tomorrow during the alpha session. So this is one of the tokens that I'm definitely interested in taking a look at more seriously. Now, take a look at this pattern for a second, you guys. So just disregard the breakout. You see this pattern here? Does this pattern look at all similar
To
to
Pendle?
Pendle's? Yeah, right? Doesn't it look like Pendle's pattern a little bit?
Hmm.
So,
Before the
so
breakout.
right, exactly. So, Pendle is one of my favorite protocols. It's essentially a fixed income like bond market, but on EVM chains. Extremely useful.
Well, I
And
know that you really enjoy Pendle, and then also using Contango with it, for looping. So, I mean, I know that that's a big part of a lot of your strategies.
yeah, I've actually shied away from using Contango to loop, and instead I've started to manually loop PTs rather
Mhm.
than using Contango. But Contango is a great protocol. I really like Contango. And,
Mhm.
taking a look here at Pendle, wouldn't surprise me if on a true alt season that Pendle runs, maybe up towards like $10 or $11, something like that, on a true alt season breakout. So Pendle is definitely one of the assets that I'm interested in. Let's just take a look, you guys, at BNB real quick, because if we're talking about parabolic runs, well, man, BNB, this is a parabola, just running straight up. Now, here's the thing that I think about when I take a look at a parabola like this. Number one, I just can't buy a big green breakout like this, and I just can't buy a parabolic run. And the reason why is I think about risk versus reward. So if I think that BNB could make it up to, let's say, $1,800 over the next couple of weeks, well, that's 37% to the upside. But what happens if I'm wrong and BNB corrects down to its 200-day moving average, all the way down here at 750? That's 43% to the upside. So if the risk
Or
to the
downside.
downside, yeah, if it, well, yeah, so yeah, to the downside, I misspoke there. So
Oh, yeah.
if there's a risk of maybe BNB coming back down to its 200-day, and yet I'm targeting a 37% move to the upside, I'm risking I'm risking more than one to make less than one. So that risk reward doesn't make any sense there.
Mhm.
And that's part of the reason why I would not be buying a big breakout and parabolic run in BNB, and instead I'm just watching it from the sidelines. So yeah, that's my 2 cents on BNB, but also taking a look at ENA and Eigen and Link. So these are a handful of my favorites. Sui, Doge, and SPX also make it onto the top of my watch list here. So the
Me and Jeff
only
actually did a deep dive on SWE and SWE DeFi, and there was some really interesting data on DeFi Llama that was pointing towards a lot of inflows, on the SWE network and a lot of the protocols on SWE.
Yeah, I think that Athena just launched USDE in size. I think a couple $1 billion of USDE on Sui. So,
Nice.
yeah, this is Sui is a very fast and performant blockchain. So, would not surprise me if we have a multi-chain future ahead of us. But if the vast majority of the stablecoin volume and TVL exists on Ethereum chains, I liken this to the either the browser wars of the late 80s and early 90s and of the operating system wars. What
Yeah.
happened? There were a bunch of different operating systems and browsers competing for market share until eventually Microsoft basically won. They
Mhm.
won the market share battle. So if Ethereum has the vast majority of stablecoin volume and stablecoin TVL, and if Ethereum's market share continues to grow, it might squeeze out other chains. But for right now, that outcome remains unclear, I think. So, but I'm allocated most heavily to Ethereum right now for
Oh,
that very
for
reason.
obvious reasons.
Yeah.
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 Well, one thing I
So
want to chime in on that, David,
yeah,
is like,
please do.
a lot of people like to be the first to run, oh, Ethereum's outdated, the tech sucks, blah, 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 blah. But like when you look at Walmart, like, have you seen the computers that they're using to check people out? It works. It's secure. It's not getting hacked. You know what I mean? And that's what multi-billion dollar, multi-trillion dollar companies care about. They care about security. They care about not losing their money overnight. They don't want to be stuck in a Solana congestion wave where they quite literally cannot get their money or sell a specific asset. And they've never had
Right.
that problem on Ethereum. They have on other chains. Other people have on other chains, right? They don't want something that has centralization risk. And that's also why they target Bitcoin, just because it's so decentralized, right? Same thing with Ethereum. It's so decentralized that they want to use that instead. And what you'll probably notice is a lot of the innovation on other chains is done on Ethereum first, right? Every product on Solana, at least to my knowledge, has been done on Ethereum to some variation or extent, basically. There are like a few like edge cases, of course, now that Solana is getting larger, but majority of it hits Ethereum first. And you notice that with actual tokens themselves, majority of the tokens are not launching on layer twos or something like that. Majority of the actual useful tokens that are going to have multi-billion dollar market caps are launching on the Ethereum network with the occasional Solana network.
Well,
You
and
know,
that's always been my argument when it comes to a lot of adoption, and especially like in the case of XRP, the decentralization, centralization argument. Banks and institutions, I don't think they're chomping at the bit to use a company where it's all centralized on that company.
Yeah.
It's I really think that that's why a lot of these banks and institutions, like you guys are saying, are building on Ethereum and and looking for alternatives to and kind of agnostic chains like Chainlink, being an oracle that's that just connects others, and we all saw how Swift announced a partnership with Chainlink. It just gives them access to multiple chains. Anything that Chainlink touches, they have access to that liquidity. Those stable coins, those digital assets, the RWAs, all of those things. So that's kind of where I've been focusing is more like the rails or the infrastructure plays is kind of as far as investments.
yeah, so Mike, Jake, to your point about XRP, um, you know, and about tokens launching on Ethereum and its chains first. I still can't quite tell what Ripple's business model is. It looks like their only legitimate product is RLUSD. And the funny thing about that is, it looks to me like the majority of the liquidity for RLUSD is actually on
ETH,
EVM chains,
yeah.
which
No,
is
and
kind of hilarious, you know?
that's what
Well,
I'm always screaming from the rooftops is, I told everybody that's when I sold my XRP. I had 40,000 XRP and I sold it in that first pump because they came out with RLUSD and they added USDC to the XRP ledger. They added, RLUSD to, Ethereum mainnet. And in my mind, why it would a institution or anybody move value no matter how fast it is with a volatile asset. That's why Ripple came up with RLUSD. So
yeah.
it basically degraded the use case of XRP as a gas token, except in very specific cases. So to me, that's the fundamental change that made me sell my XRP. It's that
Yeah.
I don't look at price; I look at fundamentals. But I'm sorry. Go ahead, Jake.
No, 100%. What I was going to say regarding, Ripple is like half the people holding Ripple can't even tell you what Ripple does. They're just holding Ripple because they hold Ripple and it's going to go to $500,
Yeah.
That's why they're holding Ripple, man. So it's like eventually the house of cards comes falling down. Like when you have so many people holding something just to make money, you know what I mean? Which at the end of the day, we're all holding to make money, but there's actual use cases as to why we would hold specific assets. With Ripple, I don't see that use case. I don't see like, oh yeah, I'm gonna go park, a bunch of money in here because it's going to go up. And if the majority of the investors are thinking the same thing as opposed to actually using the use case, then eventually it's like, wait a second, hold on a second, what are we doing here? And
Yeah.
Well,
house.
and if you're gonna take a risk on hoping for price appreciation, I mean, there's a lot better projects with a lot smaller market cap. That they have a lot of other options. When it comes to their offerings. I mean, you can buy like Sui. They have DeFi. They have all these different aspects. Different use cases that are being built on them. Whereas XRP, for the most part, the DeFi is almost non-existent.
Yeah.
Before Flare, they didn't even have smart contracts. I mean, it's just why I do not get it. It's like I'm like, please do your own research. Don't listen to me or anybody else, but at least do your research because, like Jake said, if you ask them what's the difference between Ripple, the XRPL, XRP, RLUSD, go tell me the difference. And
Trust me, bro. It's gonna go to $500. Is what
Right.
exactly,
Exactly.
Trust me, bro.
exactly.
Why are we worried about the details here? It's just gonna go up.
Yeah.
Like, you shouldn't be worried about
Let's
that.
not get stuck on the facts. Let's
Yeah.
let's let's go with the hopium.
Yeah.
Yeah, man. It just the big problem for me with Ripple is that, look, the reason why I'm allocated to Ethereum and to Bitcoin is because number one, the use cases are clear and the business models are clear.
Mhm.
But with Ripple and XRP Ledger and the XRP token, the whole use case of XRP was a bad idea from the get go. That's why it never took off. It's a horrible idea. And I don't know what their business model is aside from just dumping on token holders to build up,
Just
a big treasury of cash. It seems as though their only product is a stable coin now on Ethereum. So maybe it'll be the CBDC chain. Maybe the ECB launches the digital euro to censor and control European citizens on XRP Ledger. That would make sense to me.
well, I
Call it the
mean,
CBDC chain.
and I'll give credit where credit is due. I'm on RWA.xyz right now, and the XRP ledger is number 10. I mean, there's 11 RWAs that have been, launched
Oh,
on
Mike,
the XRP.
I ended my screen share. Can you? I want to see
Oh yeah,
RWA.xyz.
yeah. Let me bring this up. There you go. So yeah, number 10, XRP Ledger. Oh, sorry. Let me transition. There we go. Um, there's 11 RWAs. It's, by market cap or, by TVL, it's has $361 million, worth of, value that's, been tokenized on chain. So, I mean, they are doing something, but their their use case forever has been cross-border payments, and I just don't see what they have to offer that I
Yeah.
can't do with USDC. I mean, I can buy USDC for free on, well, not for free. I mean, the cost, no fees on Coinbase, and I can send it to either one of you for free to
Yeah.
your wallet. And I just performed a cross-border payment, no matter where you're at in the world. And I didn't need Ripple. I didn't need XRP. I didn't need to deal with volatility of any asset. I didn't have to deal with a bank. I didn't have to, any kind of intermediary. I just, yeah, I don't get it. But there was one question in the chat. Let's lift and shift a little bit here. On Sui, is there any projects that either of you that's catching your eye on Sui's
Oh
chain?
yeah. Oh yeah, 100%. So one that was brought to my attention by a member in the DeFi U school community is Kudus. Uh, and they have launched
Spell that.
a CUDIS.xyz, Kudus. And they've launched an AI smart ring for taking your health information and tokenizing it or turning it into an NFT. So you actually turn your health information into an asset by wearing the Kudus ring. So that is pretty darn cool. Really like that functionality.
Mhm.
And the URL there, Mike, is cudis.xyz.
XYZ.
I've seen some people talking about that as well.
Yeah, I mean it's super cool, man. Just rather than giving away your valuable health information and data to some random firm that's probably going to sell it to the Chinese or something, you would actually own it,
Hmm.
which it turns it into an asset. I think that's a great idea. And their website. One thing that I want to just point out here: the way that you purchase a Kudus ring is with your Sui. You buy it with your Sui wallet, and the integration that they have on their website here, it's seamless, extremely easy to use. So this is a true Web3 native product. I really, really like this.
All right. How about you, Jake? Anything on Sui that catches your eye?
Honestly, this is the only one that I've seen that's caught my eye recently. Other than that, I haven't really seen anything. So again, like this is kind of like what I mean when you see innovation. You have those very edge cases, but for the most part, things are being built on Ethereum first. And I would argue that depending on the tech this has, it's probably better on Sui than Ethereum because cheaper transaction fees and
Mm,
whatnot if they're storing data on the blockchain. So
Yeah,
yeah.
and the
Oh, go ahead. Sorry,
wallet,
David.
yeah. Mike, if you scroll down just a little ways there, it showed the wallet integrations right there. Pause there. Yeah. So Slush. So Slush is, I think that's the official the Sui chain wallet. Isn't
Mhm.
it created by the same team that built the Sui chain? I think so. Not quite positive on that, but I'm pretty sure. So when I created just a Slush hot wallet, you can create a Slush hot wallet with your Gmail account. And then I can use Change Now to bridge from ETH mainnet to Sui and use my Slush wallet to buy that Kudus ring. So I really, really like that Web3 integration that they have there for payments. I'm really focused on the payments use case for all of these chains. And Kudus is not just a payments use case, but turning your health data into an NFT and turning it into an asset. I think that is, Jake, like you were saying, an edge case.
yeah.
Very interesting.
No, absolutely. So I'm sharing right now. I kind of, this is what I kind of use to keep my finger on the pulse of, just, kind of the DeFi ecosystem is, here on DeFi Llama, and I got TVL pulled up in the blue. This magenta color, this pink color is the DEX volume, and the orange is the perps, DEX volume. And so, I mean, this is kind of what I've been watching just to get a feel on how money's moving, just what's going on with the markets. Because I mean, me personally, I feel like we're in uncharted waters right now, just with how much has changed and kind of what is making this cycle different from past cycles. I know that we've talked about it before, but I kind of just for a second want to burrow in a little bit on you know there's been a lot of talk. I think it was like yesterday or the day before that, if we followed the same cycle, that the top of the cycle should have been like a couple of days ago, and all that kind of jazz. What are you each seeing? And Jake, go ahead and take the lead on this. I mean, what are you seeing that leads you to believe that either this cycle's different, that it might be a super cycle and an elongated cycle, or have we seen the tops? Are we just going to kind of trend sideways with all the institutional money? What are you seeing and what are you thinking of as far as this bull market that we're in?
Yeah, so like obviously we have institutions. I mean, we've already spoke about that a lot, but the other thing that we have to keep in mind is like, and I saw this post, so I don't want to take full credit from this guy named Jeff Sekinger. He's based out of Miami. He runs a hedge fund for crypto, basically, and he also has some cool stuff that he does. Um, and he made a good point, basically. We're in an institutional bull market and a retail bear market, right? Like a lot of retail investors still don't have the money to invest. Yeah, the masses are coming in. Yeah, 28% of Americans hold, some form of cryptocurrency they reported. And I'd argue to say 20% of American adults. I mean, I'd argue to say it's probably a little bit less. It depends on where they surveyed at and how they're getting that data. But it's like you don't see a lot of retail investors just dumping money and money and money in there. So it's like that's a valid point, I would say. And then when it comes down to institutions, obviously they have high profits. They're dumping money into Bitcoin and whatnot, and large companies are adding Bitcoin to their balance sheet. So, yeah, that's kind of my take on it.
Yeah, so I think that this bull cycle is being led by large institutions on Wall Street. And you
Yeah.
can see that with the ETF products, right, Jake?
Mhm.
We're seeing these massive inflows into, all of these crypto asset ETF products. The BlackRock Bitcoin ETF product, I believe it is about to surpass or just surpassed $100 billion in AUM, which that would make the BlackRock Bitcoin ETF, the fastest ETF to ever reach $100 billion in history. Um, so yeah, I mean, it looks to me as though the tokenization of everything is being led by Wall Street, and it looks like retail investors have not decided to FOMO in to digital assets, and instead it looks like retail investors are just buying, stocks hand over fist. I read that last
Gold as
month,
well.
and gold too, but mostly stocks. I read last month that last month in September, over $100 billion in retail inflows into S&P names. So $100 billion in inflows into stocks. We're just not seeing retail participation in crypto, not like we saw last cycle. So, yeah, the social risk. If you use Ben Cowan's Into the Cryptoverse product, he's got a social risk indicator there. It's sitting like near bear market lows. And if you take a look at search volumes on Google, the search volumes are also near bear market lows. So we're just not seeing retail participation. But we might see that if Bitcoin breaks out above like 130 or something like that, ETH above 5K, and we get a true alt season. I think that might bring retail back.
Good
All
take.
right. So, I mean, this is kind of what we were talking about last night with Sui. It's just this is kind of what I was noticing is end of September, beginning of October here. Quite the jump in TVL. We went from what is it, 1.8 billion to 2.6 billion. In just that this past couple of weeks. So, saw that. And then, of course, the DEX volumes have been spiking. So, this is something I'm always interested in trying to kind of figure out, how the liquidity moves. Because, you saw it on Hyperliquid. That was, the hot, DEX there for a while. And then Aster came out, all the liquidity moved over to BNB. If you look at, the bridged liquidity, heat maps and stuff like that, it's showing that there's a ton of liquidity, and that's plays a lot into the pump that David was talking about, on BNB, the token itself. There's just it's interesting to watch how the money moves and figuring out ways to kind of front run it, because if you're jumping into these things, when everyone's talking about it, you're the exit liquidity. You really need to be early if you're trying to chase these narratives and chase these things. You really got to be early, or again, you're just going to end up being the people that did get in early. You're their exit liquidity, so they can go on to the next one. And you see the same thing with Bitcoin with the heat map. Where they the liquidity chart where it shows the longs and the shorts and where they're built up, and you can almost just watch it. The market makers going up and taking out the shorts, and then they go down and they take out the longs, and then they go up and they take out the shorts, and it's just like this windshield wiper. Josh, this guy over at Discover Crypto, he calls it the windshield wiper method, and they're just going up and down, just wiping out liquidity, and Yeah, it's just insane to me, and that's why I'm so engrossed in data. Is because like David was talking about earlier, or actually talking about, he brought up media and how they use the media to influence people's emotions. Data is a great way to eliminate emotion, because data, as long as it's reliable data, doesn't lie. Whereas, the media and social media is purpose built to take advantage of your emotions. So, I mean, what's your thoughts on that, Jake?
Honestly, if you're not following data, I'm not sure what you're doing, right? That's why we like to say data-driven investors like to, or not like to, but data-driven investors are always going to end up more profitable than people that are just throwing their money hoping for the best. And that's why we
Mhm.
created Metrics Finance. That's why we use tools like DeFi Llama. That's why we
Mhm.
train AI on data. Because the more data it has, the better decisions it can make. And using tools like AI make that data easier to access and easier to parse in your brain, basically, um, to get more of a personalized response. So,
Well, that's what I loved on Metrics Finance, that you added that on the Elite plan, that AI that you were throwing the screenshots in.
yeah,
Like if I did a screenshot of this, and I could throw like some other stuff in there, and I could ask it. I could say, hey, does this chart, indicate that potentially, a lot of liquidity is moving into SWE, and you know, basically you can ask it, whatever you want, and it will actually analyze it, and it will tell you where it got, its conclusions, all of its references, like where it got its information. And I don't know, that to me, that was, such a valuable tool, because like you said, if you're not investing, or if you're in a liquidity pool, or you're borrowing and lending, or doing loops, you can throw, all of the screenshots in there and say, hey, should I rebalance this? Should I enter this position? Should I exit this position? And if you're not using these tools, these super powerful tools, a lot of them are free, DeFi Llama and RWA.xyz and stuff like that. There's even a free version of Metrics Finance. If you're
yeah.
interested in that, there's a link in the description. But yeah, it's just, if you're not using these tools, what are you doing? Why are you even bothering to invest? If you're not going to do your own research into these projects that you're dumping hundreds or thousands or tens of thousands of dollars into, why don't you just go to Vegas and bet on black? At least it's a 50-50 shot.
For
You know what
real.
I mean? It's just, I don't get it. How can people say that they're investing, but they're not doing their due diligence?
Well, because number go up, bro. What do you mean? So there's
Give
a
me
good
five hundred
question.
dollars. I swear, man. I
I know. It's gonna be $1 million tomorrow.
yeah.
Yeah.
There's a pretty good question in the chat from Stan. He says the guests are locked into a small number of projects according to their conversations. Do the guests suggest focusing on a limited number of projects? If so, how many and why? And I used to think that diversifying across a handful of different niches in DeFi and in crypto was the way to go. But once I started pricing these various alts in BTC terms or in ETH terms, it became pretty clear that the vast majority of alts massively underperform Bitcoin, and they're much more volatile than Bitcoin. So, what that means is you're taking much more risk and generating a lower return or even a negative return in many cases. So, for me, I like to focus on the handful of protocols that, number one, have a long track record of success. Number two, that I trust, they're because of that long track record of success. So, I like to focus on EVM chain protocols like Aave and Uniswap. I quite like Morpho and Euler. I really like Pendle. That's 5 protocols. That's it. I could take a look at a perp dex, maybe something like Hyperliquid or GMX. Hyperliquid isn't really a perp dex, but a perpetual futures trading protocol like Hyperliquid. But I like to keep my universe of protocols that I operate on a day-to-day basis small. So that's not just for me. What do you think,
I
Jake
do
and Mike?
I do the same thing. It's I have a handful that I stick to. Aerodrome, is kind of one of my. I'm big on base just because that's where I've done a lot of my research. Morpho, of course, for borrowing and lending. Aave, Uniswap, just well established. What I feel well is well run protocols. So yeah, I mean, I definitely see why you gentlemen do that is if you have a formula, don't mess with the formula
Yeah.
until something better comes along. But kind of we'll start closing it out. But Jake, kind of what is it that you do as far as on that topic?
Yeah, so I believe in different layers of diversification. So you can diversify across asset class, you can diversify across assets within a class, you diversify across different platforms, you can diversify across different networks, right? And I like to do a mix of them. So in my liquidity pools, now I'm typically only running three, just three large positions, and that's about half of my portfolio. Um, and then when it comes down to lending, I could be a little bit, more diversified. I could have maybe five solid assets, six solid assets that I'm lending and I'm borrowing against. I'm also pretty constrained to blue chip assets with lending because I'm not trying to use like smaller markets or anything. And then when it comes down to hodls, I'm happy to have like 10 other hodls or so that are diversified across maybe two or three asset classes. Like I'm big on like projects that are powering the AI space, like Aether, Desync, stuff like that. I'm also big on real world assets, and certain assets like Link can even tie into real world assets. So yeah, I like to kind of have a little bit of a layered diversification across all those, as I mentioned, and then ultimately be more diversified depending on management level. Because when I'm buying whole hodls, I'm hoping to hold them for the entire market or the remainder of the market, which when I buy them is typically a 6 month horizon on average. With lending, again, like a long, long time horizon. And then when it comes to liquidity pools, that's what I'm doing on a more short term basis. So I have to put more input into those, which means that I'm not going to be as diversified.
Hmm. All
Now,
right,
Jake,
gentlemen. Oh,
I've
go
got a
ahead.
question for you, Jake.
Yep.
So, if you think that the end of the cycle is near, and that might mean that we're going to see an alt season over the next couple of months, hopefully.
Mhm.
Well, if you think that's the case, and I'm just making the assumption that you think that, then why would you have a significant portion of your portfolio in LPs rather than in spot holdings?
Yeah, good question. So as of right now, I'm still pretty bullish on Bitcoin and Ethereum, and I'm also in stuff like Soul Render, which has been retaining the majority of the earnings right now. What I'm trying to move more towards are those leverage positions on Hyperliquid. So rather than exiting the LPs and whatnot to dive into just holding assets, like why not just add some more capital and then throw leverage on those assets, basically. So ultimately I have the exposure that I want and I catch the upside. And since I'm investing for a little bit more of a longer term horizon, 2x leverage is fine because all the assets that I'm investing into, I'm not expecting to drop 50%. And if they do, oh well, that sucks for me, but I'm hoping they don't. So yeah, that's like the thing. And also a lot of what I do is taking income from the LPs and then parking that into hodls or using leverage to grab a hodl right there. That's one of the new kind of flywheel strategies that we've created.
Well,
Maybe you're yeah, go
well,
ahead.
I know on your website that was it metrics.
Metrics.com.
What Yeah, yeah. Where basically you have that not a calculator, but it basically tells you that this much in stable LPs, and it kind of breaks it down to where
Oh, okay.
how to diversify your portfolio.
Yeah. That's on crypto correlation. Okay, makes
That's
sense.
it. That's it.
Um,
Here, I'll pull it up real quick.
yeah, basically. So ultimately, you know, that's one of the flywheel strategies we can do. I'm, pretty bullish on altcoins right now, but I also know that Sol Render have a low price volatility on the actual pair itself. It
Allocation
generates,
planner.
yeah, it generates, pretty good yield. So what I can do is I can ultimately generate the yield from Sol to Render, take that yield, hold it all in Render, but then take that Render and go and throw 2 to 3x leverage on it. So when Render starts to go up, I catch it on the LP maybe 60% of it, maybe 70%, who knows? But then I also catch in all the earnings as well. And I keep my diversification across my portfolio where I'm not over allocated to anything. So yeah. And I do broader ranges too. So
Now, real quick, Mike. I know we're just about out of time. One thing that one of my private clients brought to me, a piece of research, was he showed me for one of his example Sol USDC positions. I'm just talking about a volatile asset paired with a stable. What he showed me through his research was that it was the difference between how much price appreciation you're able to capture in an LP paired with a stable versus holding that same asset spot. And it looked like at the very maximum, you'd be able to capture like 15 or 20% of that price appreciation with an LP, importantly, paired with a stable, not a correlated LP. So with a stablecoin LP like Sol USDC or ETH USDT, something like that, my expectation would be on a run higher for that LP to massively underperform a spot holding. So that may be different with a correlated pair depending on how that correlation holds up.
And
Yeah.
and that's kind of like that's kind of the big reason why. I mean, I'm not operating with the amount of liquidity that you gentlemen are. I got maybe 60, 70 grand that
That's a
that I
lot of
have.
money, Mike.
Oh,
60 or
no,
70
no,
grand is a ton of
no, it
cash.
is. It
Yeah.
is. I just don't have like the extra liquidity to do like what Jake was describing and stuff like that. So I've actually moved probably 90% into spot positions. I mean, I have a couple of things that I have, staked in, we talked about this before, where there's no cool off or, anything like that. I can make it liquid very quickly, those sorts of things. But
mhm.
for the most part, I'm sitting in spot, just, hoping that we get an alt season for that reason. Because I don't want to miss out on the gains if they do happen. But I'll tell you what, though, if this doesn't pop off soon, I might rethink that because I've been in a holding pattern for a month or two now.
Yeah, we're getting close to the end. This should be the period of time, Q4 2025, the post halving year. This should be when we start to see some fireworks. So hold tight, man. I think it's the time to sit on your hands and
Yep,
prepare to exit.
Yeah.
that's what I'm telling our community is there's a lot of people getting itchy and they're like, should I get out of this asset and get into this? I'm like, no. If you did your research, if don't chase pumps. Just because that asset isn't moving, don't go buy this asset that already pumped because then you're just going to run over here. That's going to correct. The one that you got out of is going to pump. You're going to be like, oh shit, you're going to jump back over there. That's going to correct, and you're just going to be bleeding liquidity. So, yeah, that's kind of what I'm telling people is stay unemotional. If you did your research, you've allocated, just sit tight. But I'd like to thank you, gentlemen, as always bringing great information and very reasoned and very calculated information as well. Not hype, not a lot of hopium and things like that. It's which I very much enjoy, and I actually really like that. Quite often, we kind of we'll have differing opinions on some things, as far as assets and things like that. But that's what makes for a great conversation. If we're
Yeah.
just all sitting in here, patting each other on the back, agreeing with each other, there's no value in that. We need to be challenging each other's, kind of stances on things because it makes us, personally as well, assess, and maybe even open our eyes to other data that we weren't aware of. And the people watching, they get to, get a better rounded, view of different projects. So it's just it's not something you see very often, and I guess what I'm trying to say. And I just want to thank you, gentlemen, for coming here
Yeah.
and sharing your knowledge.
Of course.
Thanks, Mike.
Yeah.
Not a problem.
Having fun.
So in the chat, real quick, I just want to point out everyone. There was a couple people asking, like, and you gentlemen. So I just want to kind of go over that real quick. If you go to our channel, you can find Jake and David. Oh yeah, DeFi University is David's YouTube channel, and you can find all of his links there to DeFi University and whatnot. If you want to use our referral code in the description of our channel, and on all of our episodes, you can find links to the DeFi University and also Metrics Finance. Full disclosure, we get a little bit of a commission, if you use our links. We greatly appreciate if you do, but if you don't, that's fine too. These are great resources. I just want to make sure that you're all being pointed to quality. And if we make a little bit of money, cool. If we don't, that's cool too. But either you gentlemen got any closing thoughts before we go?
That's all from me. I mean, I think it's an exciting time in the market. It gets boring, as Ellie said, but just wait.
Yeah, I think one thing that I've been talking a lot about recently in DeFi are cognitive biases and the logical fallacies that we fall for all the time, and they're predictable. One that comes to mind here is loss aversion. So, the fear of losses feels doubly as painful as does the pleasure of gains. And so that leads people to make all sorts of bad decisions. Usually, this is what it looks like: cutting a winner much too early because you're afraid of that winner turning into a loser, or letting a loser run rather than cutting it immediately. And that's because you've got this hope that it's going to get back to break even. Hope is not a strategy. So, leading into the end of this cycle and the rest of Q4, I think that it's time to make your bed and sit on your hands a little bit, and then let the gains come to you. And importantly, write down your plan with pen and paper. You got to get it out of your head and on paper. That way you can follow it without thinking about it. That helps to remove the emotion from things, I think.
100%. Yeah.
Hell yeah, quality. It's quality
Yeah.
right there. So, yeah, man, that's what I got for you guys. I appreciate your time. Thanks, Mike.
Yeah, appreciate
Jake,
it too.
thanks, you guys.
Of course. Is Mike frozen?
I don't know. I can't see him moving.
Yeah,
Looks like he's
I'm
off.
like, okay, go ahead, Mike.
I know, right? I was waiting for him to jump in, and
I couldn't see because the icon, whatever, was over his face. So
yeah.
Well, me and David will end it off. As always, check out the DeFi University, subscribe to DeFi Crypto Airdrops, and check out Metrics Finance if you are potentially interested in investing in the market.
Check out the lend borrow stuff that Jake just finished building and launched the other day. That stuff is next level at Metrics.
I'm already kind of vibe coding the with ChatGPT the UI for V4.
I love it, man.
I'm excited. I'm just working on like the layout, and then I send to the team and tell them to do the rest basically and put it in the app. But I'm excited. So yeah.
Hell yeah, man.
All right, gentlemen. I appreciate you. And those of you out there that have black hole locks, or if you have arrow locks, do not forget in the next hour to do your voting if you're manually voting, or you're going to end up auto voting for what you voted for last week. So with that, till next time, Veteran Crypto out.
Sweet. Peace.
Peace.